watching Morning at NTV.
Yes, we were already into a discussion behind the scenes, but of course we now come to you introducing a business update where we are talking about understanding the dynamics of filing tax returns. We have a guest from Uganda Revenue Authority who will be helping us understand that. But before I introduce my guest, let me just give you a preamble. Uganda's tax regime is geographical for all Ugandan residents and source-based for non-residents. The Uganda Income Tax Cap 340, that is under ITA, imposes income tax on income of corporations, partnerships, trusts, and individuals residing or carrying out business within the country. We are speaking to Joweria Nakirunda, who is a domestic tax officer at Uganda Revenue Authority. Many thanks for joining us, Madam Nakirunda. How are you?
Yeah, I'm fine. How are you?
Good. How is the tax man?
Yeah, we are fine.
Yeah.
We are busy though.
Earlier in the show,
Yeah.
I was giving an analogy of the legendary singer, Lucky Dube. He said he knows why he pays the gardener.
Yes.
He knows why he pays the lawyer. But he struggles to understand why he pays the taxman.
Why would he struggle?
As a Ugandan,
Yes.
I'd love to ask the simple question. Why do we pay URA?
Okay. Okay, thank you very much for hosting me. My name is Joweria Nakirunda. Yes, I'm from URA. And you know URA was an agency created in 1991 to collect, assess and account for central government revenue.
That's right.
So this revenue that we collect is used by the central government to provide services to the public. That is the construction of roads, the bridges, payment of government workers, the teachers. We've had several times the teachers are striking, they want increase,
That's
the
right.
doctors. All that money that is paid comes from the taxes we collect from the public. Of course, there are different types of taxes. We have the income tax, we have the VAT. So all those taxes we collect is sent to the central government in the consolidated fund, and that money is used to provide the public services and payment of government workers.
Good. I think that question is answered on behalf of those that asked it as early as the time of Lucky Dube. Now let's get into the thick and thin of income tax.
Okay.
Who pays, who doesn't pay, who is exempt, who is not exempt.
Okay, so income tax is basically a tax on what you earn, and we have three sources of income. We have the business income.
Yeah.
People who are doing their own businesses. You could be registered as a company, a partnership, an individual who is a sole proprietor, and you are transacting but through business. So you have an income source of
That's
business,
right.
and those people are usually taxed on how they are registered. We have the companies that pay corporation income tax, we have the individuals that pay the personal income tax, but we also have the common presumptive income tax for the small businesses. Then we also have people who have property and their source of income is property. So this property could be buildings or land, maybe like the landlords. They have buildings, they get tenants and receive money. They have an income source of rental, so they also pay rental income tax, which is a form of a category of income tax. Then we also have people who have properties like cargo vehicles, passenger transport vehicles.
Yeah.
Those ones pay the advance income tax on commercial vehicles. And we know that commercial advance income tax is for passengers is 20,000 per seat per year. So we take an example of a border. It will pay 20,000 per year. But if you look at a taxi, it has 14 seats, so it pays 20,000 times 14, which is 280,000 per year. So everybody pays in accordance to how they are registered and how they earn. But now we also have the employees like me who are paid a salary every month. Those ones, they have an income source of employment income, and they pay as you earn, payee, and this one is deducted by their employers every month as they pay them that income. It's employment income.
Okay.
Yeah.
Wow. And then what is withholding tax?
So withholding tax is also a form of income tax, but it is tax deducted in advance. Take an example of pay. It's also a form of withholding tax.
Yeah.
But we also have where the withholding tax is creditable, and we also have where it is final. So it can be creditable when you can use it to reduce on your final liability in your final return. Take an example of the one for government supplies. Anyone who is supplying any government designated withholding agents, normally they are MDAs and some of compliant taxpayers. Every time you supply them something, there is a withholding tax of 6% on the amount that you are paid. So you agree with, for as long as that amount is above 1 million. So you agree to supply, let's say you supply, maybe I agree to supply maybe URA to supply them lunch, and my amount maybe is 2 million because it's above 1 million. So if I'm being paid my 2 million that we agreed on, they will deduct a 6% on that 2 million. So me, I'm supposed to file my final return and remove or include that withholding tax that was deducted in the year to reduce on my final liability. So it's my tax, in other words, but retained by the person who pays me.
Wow. So that the way I look at it, or understand it rather, is that it applies to people who are supplying an entity independently.
Yes, but also there are smaller categories of withholding tax. We also have the one of mobile money. For example, mobile money, we have final withholding tax of 10%. So when Airtel or MTN is paying this agent commission, they deduct 10% every time they are paying. That 10% is a final withholding tax. There are smaller categories. But we also have withholding tax at importation. Every time you import anything into the country, for as long as you are not exempted from withholding tax, there is a 6% that you pay on the CIF, the cost insurance and freight of that item.
We shall quickly be looking at the obligations of employers, but what I gather from your revelation is that you are bombarding the average taxpayer with so many taxes.
No, it is just one tax type, but I said it is different categories applying to different people.
Yeah, for example, if I'm a supplier of a product or a service to an MDA within government, I've paid that withholding tax. It is taken. Now I go to send or receive money on mobile money, and the agent has to pay that tax. It means it is factored in within the charges. That is again another tax.
No. Remember, income tax, we are looking at an individual, at a person.
Who also
so we are saying
moves it to the
every person
customers.
should pay their own share. So if I'm an employee, I have my share. I pay on my employment income. That means the agent has their own share, they pay on the commission they earn. It also means that me, who is a supplier, I have my own share, I pay, maybe I'm a company, I have a company, that company has its own share, it pays of 30%, but the withholding tax reduces on that share of 30%, meaning if you had 6% deducted, but you're supposed to pay 30%, you reduce on the amount of the 30% that has been computed on the profit. So you reduce that amount, any amount that has withheld from you. So it's a form of income tax. It remains the same, but we are saying everybody is taxed on how they earn and how they are registered.
Okay, within the context of Morning at NTV, being an employee at NTV and speaking on behalf of the rest of my colleagues, what are the obligations of the employer when it comes to especially being able to pay payee and also put this withholding tax to the taxpayer, especially for those that are supplying the service? Do you monitor who has paid, who has not? If an employer doesn't do that consistently, what is done and how is the employee notified so that they can push?
Okay. Pay, like we have said, it is tax paid by the employee, but the obligation of paying, deducting is on the employer. So this employer has an obligation of registering and getting a TIN, the tax identification number. But when they get that TIN, if they have any employee exceeding 235,000 per month, they are supposed to add payee as a tax head on their TIN. That is the first obligation of registration. Then after registering, we expect them to file returns every month. A pay return is a monthly return and it's supposed to be filed by the 15th of the following month. So if you withheld in November, you paid salary in November, you withheld pay from your employees in November, we are expecting that return by the 15th, that's Friday this week, by the 15th of the next month. So they have an obligation of filing the return. After filing the return, they also have an obligation of remitting the tax that has been deducted from the employees to URA. Then they also have an obligation of maintaining the records of the employees, the payroll. URA may want to come and check. You've seen your returns, you are declaring there you have 1,000 employees and you are deducting this much. Who are they? So we expect you to maintain these records for about 5 years. So.
All right, so what are the common risks that are associated with filing and the declaration of income tax?
The common risks, the commonest risk that we have, most of the employers don't want to include the TINs of their employees when they are filing returns. So when you don't include that TIN of the employee, this employee will not see the credit on their TIN account. But when you include the TIN of that employee, we automatically post on their ledger, and they will see how much has been deducted from their salary in their TIN account. So if you don't, you are doing a disservice to them, because they may want to know. Of course, there is another way that you can give them a tax credit certificate at the end of any period, but the best is when they see it automatically that you have deducted. Maybe also this pay that is deducted, it's not the business's pay, it's not the business's tax, it is the employees who have paid. So you, as a person who has deducted, the employer, you have an obligation of remitting this amount you are in the time that is prescribed, that is by the 15th. Because if you don't do that, it starts accruing interest of 2% until it's cleared. Then also filing the return. Some of them forget to file returns. When you forget
they
file.
forget.
Yes, I don't know whether it's deliberate or they forget or they don't know. But we can teach them. We are always available to teach them. It's very simple.
How is that
file
done?
This pay return,
especially online.
Yeah, you just log into your TIN account. You fill the form telling us these are the employees, these are their TIN, this is the amount I've deducted. Then you submit, and that is your return. Yes, so after filing the return, you go and pay the amount that you have deducted, still by that period of 15th. So some of them forget to file. So if you forget to file, there is always a penalty.
What is that?
That penalty is 2% of the liability of 20 or 200,000 per month until you file.
Wow.
So they should always remember to file, and also to maintain the records.
The records,
yes,
in case
you may want to check on them to compare. But also,
or they could also have an issue with URA, a miscalculation somewhere, and they need to refer to those records.
Yes, but also as we file our income tax returns, most of our business are supposed to include the wages and salaries as an expense allowed. So you sometimes when they are claiming these expenses, they forget to compare with what they have been putting in their pay returns. This amount should be the same, because it may not be exactly the same. At least there should be reasons as to why what you are claiming the income tax return as an expense is not tallying with the payee details. Then also some of them have different number of employees in NSSF from the ones we have in URA on the payee return. These ones should be at least similar. Yeah.
Okay, before you give us your last words with regard to this topic, allow me just squeeze in this very political question. When we listen to politicians in the West during campaigns, the tax returns issue is a very important one. They are required to demonstrate that they've paid their taxes religiously or consistently for those years that they've been either working, whether in government or private sector. In Uganda, I do not know whether the Electoral Commission or the powers that be require Uganda Revenue Authority to reveal the tax returns of individuals that are seeking political office.
No, okay. What the requirement is, we don't want to reveal the tax returns, but what we do, we ask you before you go for nomination, apply for a tax clearance certificate, and URA will check, and whether you see whether you clear, you've been fulfilling all your obligations, and we shall issue you that tax clearance certificate, which you take for nomination at the Electoral Commission. But we don't display for everybody. We just give you a tax clearance. That this person has been compliant for this period, and we don't even mention how much you have paid. We just give you a tax clearance, which you go with to the Electoral Commission.
Any last words on this?
The last words on this, I would like to remind all our taxpayers, especially those ones who are registered for the monthly tax heads, that is payee, VAT, lead, withholding tax, that the due date for filing the monthly return for November is 15th. That is Friday this week. So please file your return and pay the tax due to avoid the penalty we have talked about, and the interest accruing when you don't pay on time. But also for the people in businesses or those ones who are not filing monthly returns, this is the period when we are supposed to submit in our provisional returns for this year, especially the non-individuals, the companies, the associations, the NGOs, the CBOs. Those ones are supposed to file their provisional returns by 31st December. So I remind them, please file your provisional return by 31st December to avoid the penalty you have talked about and the interest. But also remind those ones who haven't filed their final returns for last year that the due date is the same, 31st December. Those ones with a normal year of income. A normal year of income is the one which starts 1st July and ends 30th June. So they should file within these 6 months their final for last year and their provisional for this year that is going to end 30th June 2023. So for any other queries, probably they can call our numbers, the toll-free line. Our toll-free line is 0800 11 7000. But we also have our WhatsApp where we can answer you instantly. That is 0772 1400. We also have a services email where you can send that return that has failed to upload, and we assist you. It is services@ura.go.ug.
Joweria Nakirunda, Domestic Tax Officer at Uganda Revenue Authority. Many thanks for sharing with us the dynamics of filing tax returns. I now have an idea, and I understand why I get this periodic notification of credit certificate. That means I'm doing pretty good when it comes to filing these returns. Many thanks for the perspective and, of course, the insight. That will do it for this business update. Kickstarter discussion is up next, and it's business related. Priscilla Regina Naloga shall be undertaking a discussion on the performance of MSMEs in the year 2022 ahead of 2023. Stay with us if you can.